Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Out here. But you have the global situation worsening.
Okay. Then we just have to...
domestic macro problems, you've got a bigger issue.
Sorry, Udain. Actually, the bell's gone, the opening bell. And ICICI is starting with a -2. So it's not all hell breaking loose. And actually, the Nifty is starting in the green. 0.4 in the green. Mid-caps are... actually, our markets are also factoring in the day they didn't trade. That's the Thursday trade, when we had a fairly, big paint of green across global markets. So it's and now the ICICI losses are increasing. It's now 2.6%, but even then, it's not as big as the pre-opening indicated. Bajaj Finserv is also in the red. Axis Bank is only about less than 1% in the red, 0.9. Okay, now 1%. And Bharti Airtel, as Riva was telling us, that killer offer from Relgio is likely to keep telecom stocks a little under pressure, and that's happening to Bharti Airtel. Titan also a little bit in the red at this point in time. But among the green stocks, I think Maruti would be okay. GAIL is up 2.9, Vedanta 2% up, Tata Motors, Maruti Suzuki up 1.8, HDFC is up 1.5, Eicher up 1.1, Kotak is up 1%, and HDFC Bank 1%. Where's Bajaj Auto? After the numbers, is Bajaj Auto indicating any positivity at all? The Bajaj Auto number will come up for you. Okay, up about 0.6. So that's the market for you. Actually, taken all the bad news the Bank Nifty is flat and the Nifty up 0.5%. Okay, I just spoke too soon. Now marginally in the red, the Nifty Bank.
It's only the Bank Nifty that is marginally the red. Give and take all of the pressure seen there, it's not a bad opening for the market. I mean, up about 120 points on the Sensex. The Nifty is up about 50 odd points. In terms of individual stocks, the stocks on the downside in the broader markets, Canara Bank and Canfin Homes, because that they've called off the divestment. So both those stocks are down. Canfin Homes is down almost 7 odd %. You have, a couple of these names. Videocon, of course, that has been dragging lower for the last many days because of the whole issue with ICICI Bank, so down about 3.5%. Quality is down another 4-5% this morning, so keep an eye out on that. Fortis had lost about 14% on Wednesday, but it's making a bit of a recovery this morning, up about 2.5%. Cadila Healthcare, 0 observations at its Ahmedabad facility. So Cadila Health is actually in the green, up about 2 odd %. And Alchem Labs slightly in the red. By the way, a couple of more stocks on order wins moving up higher. Punj Lloyd, pre-opening had a good run, and this morning as well, once the market opened, Punj Lloyd is in the green, up about 5 odd % right now. Not a bad opening. Yes, it is coming off a tad bit and being dragged down by the Bank Nifty.
Absolutely. Well, Ashwini, you said that 10,100, 150 will be your range. It's opened above 150 and stayed there for the first few minutes. What's the Nifty trade now?
I don't think you should be buying in today's, first day of the expiry, and you come off a bad expiry, etc. So maybe this kind of opening was expected. But as we speak, ICICI Bank opened 2% lower, now is moving towards 3.5%.
Yeah.
We have taken short positions on Bank Nifty. Let's see if it plays out. Chances are once this early morning, buoyancy is over, we should head down. Obviously, high of today should act like a stop, but I think the banks will see further downside.
Okay, so are you taking a short on the Nifty Bank or any of the indices?
Yes.
Yeah, you are.
Yes.
Okay, short on the Nifty Bank. It's down about 30 points right now. Sudarshan, any thoughts on how to approach the opening?
Yes, this is I'm buying. I am already long in the Nifty, and that's my suggestion. Go long. It's a complete contradiction. This is a positional trade. Markets will become choppy in the next few days as they build a base and go higher. So accept the choppiness, but be on the long side of the market. Two stocks. One is HDFC, the housing finance company. That's a buy for the day after the open. And the second is NBCC. It's a little less than 2% higher now, but even at these higher levels, it's a buying opportunity. These are day trades.
All right. Mitesh, anything on your radar? Mitesh?
Yeah, I'm watching the 24,200 mark on the Bank Nifty. And apart from that, I think Exide is something which I flagged in the morning. I think that's showing good continuation. So I think that should be the first trade which people can take with stop just below the day's low.
Okay. All right, gentlemen, thank you very much. I get, yeah, sorry.
No, no, let's thank our technical guest, but I just had one more question for Udyan, because ICICI Bank is really falling now. It's down almost 4.5%. Udyan, I know we discussed this, but what should long-term investors do at this juncture? Because the common view that we got over the past 1.5 hours is that, you know, a change in leadership, cleaning up of the bank will actually be a positive in the long run. So would you use this as an opportunity, or do you think that there are better opportunities in the market now?
You know, judging stocks and what to do with stocks in the midst of news flow is always a bit of a hazard. The one thing that you can say about ICICI Bank, Sonia, is that the stock has corrected a lot. You know, when the gaining view about a couple of months back before the budget was that corporate banks need to be bought because they're ending the cycle, down cycle, and they will slowly start to improve. Then the stock had reached, if I'm not mistaken, 360, 365 kind of levels. From there, now it's come down to 270 kind of level. So the fall has been fairly sharp. I mean, it's lost about a third of its market cap in maybe a couple of times. It's not a small amount of market cap either to lose. So if you look at absolute valuations, regardless of where, if there is any kind of wrongdoing, I think valuations look very, very attractive. The problem is twin. You don't know what this news flow will do how it will turn over the next few weeks. And B, you don't know what their reported numbers will be given recent RBI circulars over the next few quarters. So these two twin problems actually are the big drags on ICICI Bank. But as you asked the question about long-term investors, I think if the stock does drift down to 250, 260 kind of levels, not inconceivable, then longer-term investors can take a call that eventually this news flow will die down and it's not a PNB kind of situation, and therefore one should be looking at ICICI Bank in a favorable light over the longer term. But many caveats on that statement, because you don't know how this news flow will turn out and what it will do to the valuations of this company, of this bank going forward, if investors start to lose their faith. Because it is a very well-owned company by local mutual funds, by FIIs. So I think there is a little bit of a technical issue out there if things start to go wrong.
Okay. Well, personally, I thought PNB is a definable problem. It was 12,000 crores or 13,000 crores. And they have, I think, now gone bending backwards, looking at all their bank branches. So whatever had to be known is known about that problem. Whereas in ICICI, we really don't know how the sentiment might hit that bank. So I'm a little more worried about how ICICI Bank share might perform. No,
you know, Lata, I'm sorry to interrupt on this one, but you know, I know what you're saying, that, you know, you can ring-fence the PNB problem on Nirav Modi. But, you know, the issue is these scams and the way the investigations are going on right now don't come in once. You know, there is an air of a lot of simmering fraud kind of reportage in the system. Every day or every couple of days, you're hearing something popping up in some corner. Sometimes it's quality, sometimes it's something else. So, you know, I would be very surprised if the next 6 months pass and the only scam at the end of it that we're talking about is still Nirav Modi. My suspicion is that more things will get reported as banks take a hard look at what has been going on over the last few years. And I think it's that fear which is leashing in any kind of a recovery attempt at the public sector banks.
Yes, I mean, they have been asked to look at every NPA above 5 crore to check whether it's a failure or a fraud. So a lot can come. I take your point on that. Okay, we'll thank you on that note. Then, thank you very much for joining us and hope to see you soon. Ashwani, before we let you go, the Nifty actually has put on weight. So is there a different trade now on the Nifty, and what's the big 920 call?
See, Nifty is still in that 10,100, 200 type of band. But I think there is clear, you know, macro headwind in terms of the financials. So maybe, you know, you can still get short on Bank Nifty, even ICICI Bank particularly, because that is not recovering from the lows. Axis Bank, ICICI Bank, these are a couple of banks you can take short on. And chances are, once this, you know, first day of the series is over, you will see bigger selling come in, because you know, this sort of thing is too serious to wish away, and bigger shorts will happen only below 10,100. So far in the range, but particularly on the bank Nifty a little weak.
Okay, by the way, Tata Motors is the top Nifty gainer now. It's up more than 3% I mean, this stock has been beaten out of shape in the last 6 months and just a minor recovery right now. Let's thank our technical guests for joining us and get one more technical guest on board to tell us about the long-term outlook. Our market master for the day, Gautam Shah, the Associate Director and Technical Analyst at JM Financial, joins in now. Gautam, hi, good morning. We are making an attempt to recover in the market, but it's really not a conclusive attempt. Still trading around that 200-day moving average. You think it could be taken out, and what's the prognosis now over the next, say, 3 to 6 months?
Well, Sonia, the last 1.5 months have been quite challenging. You know, in a sense, it was a sort of a reality check after the kind of run-up that the Nifty saw in the whole year of 2017. And I think this was much required because the fact that we did not even go with the 5% correction the whole of last year just created a little bit of bubble or a froth in the system. And that has got rationalized, or that has got corrected with this 10% drop from the top. The problem is, even at levels of 10,000, 10,100, you don't have evidences on the charts to say that the market is bottoming out for good. I think we still live in a synchronized world, and as I mentioned in my last interaction, because the setup for the global markets and particularly the US markets is still so negative, I think India will have to feel the heat. And at the same time, we have our local problems. You know, suddenly in the last 4 or 6 weeks, there have been news flow that have helped the bears take the indices lower. I think from a near-term perspective, we did see a mini capitulation when the Nifty moved below the level of 10,000. So we are slightly oversold. This is not to say that we cannot recover. I think from a near-term perspective, there is a possibility of a little bit of a recovery. So 10,230 and best case 10,400 is what we are working with from a short-term perspective. And after the market completes this recovery move, you could see another leg down, you know, that takes the Nifty into that 9,800, 9,850 area. But I must say, at levels around 10,000, you know, I wouldn't be so bearish from a medium-term perspective, because while the index has just lost 10%, the mid-cap index has just lost about 12-13%. If you look at the broader markets, the damage has been far, far greater. You know, stocks have lost anywhere between 25 to 50%. So I do get the belief that a large part of the market bottomed out last week, but I cannot say that with confidence for the Nifty, for the Bank Nifty, or some of the other sectors in the market.
Okay. Good morning, Gautam. Good to have you with us. But, you know, if you have to make a guess as to how much more, as you say, you don't get a feeling that things have bottomed out. So is it what, a 5%? Is 9.7 a very good level that one can look forward for support?
Well, more than the local indices, I think we are tracking the global markets very closely, because as I said, I think it's really a global US market-led decline that India is witnessing, and even some of the other popular markets in the world. And our view is that the US market goes down to a level of 22,000 on the Dow, which is base case, and 2450 on the S&P 500. So that's a good 10% fall even from these levels. I had first presented my bearish view on the US, you know, a month and a half back, and that remains intact. So if that were to happen, you know, Indian markets after a little bit of outperformance also could lose another 5-6%. So 9,800, 9,850 is a threshold level which we are watching very closely, and I would want to believe that somewhere around those levels the market will turn a buy from a risk reward perspective. So I don't fall into the camp which believes that, you know, we are going to see a very big downside from here. As I said, the broader markets have seen a lot of pain. The setup is getting better, and post this 10% correction, I think the bull market is closer to starting the next leg up, which could take a few more weeks to come.
So if we do get this, say, 5 to 10% additional correction that you're talking about, Gautam, where do you see the opportunity now in terms of pockets, sector, stocks?
Well, near term, I spoke of a recovery, so you could see some more trading bounce in some of the popular sectors in the market, like technology and oil and gas. In fact, technology has done very well in the last 1.5 months and still has an excellent setup. So there, I think you are going to see relative strength continuously and consistently. I think oil and gas as a space has not done too badly. The BSE oil and gas index is around that level of 14,000. From there, we are looking at a trading bounce. But if you have to approach this market from a short perspective, I think the problem is still with the banks. PSU banks anyway have been hammered, and now many of the popular private sector banks, are breaking important support levels, and that has happened in the last few weeks. So I would like to believe that from somewhere around 24,700, you could see the Bank Nifty starting a reversal process, and it could actually go down and break levels of 23,500 and eventually move towards 23,000. So banks is the pain pocket in the market, and I think that's one space that is going to take the Nifty lower, along with, say, capital goods, which has seen a bit of a breakdown in the last couple of weeks.
And what would be a place to hide then, Gautam?
Well, it's pretty clear. I mean, just look at the relative strength. So it's IT. I think IT has done phenomenally well in the last 6 weeks. Not by going up, but just by staying sideways. So I think that in itself is a very positive sign, and it's almost a negative beta space at these levels. So I would definitely look at a lot of portfolio allocation in these challenging times in the IT space, and possibly FMCG, which hasn't done too badly in the recent past. Not to say that these are great setups and they will do well, but it's just that they might also remain sideways. Unfortunately, pharma, which had started to look good a month and a half back, has seen a false breakdown. So that does not speak well for the sector, and it's getting closer to its 2017 lows, where we would like to wait and watch and then take a call.
Okay, by the way, some stocks in the market are surging now. The mid-cap index actually picking up quite a bit. Just take a look at the intraday chart of Dilip Biltcon. That stock is now up almost 12% and has hit a new high. So Dilip Biltcon, big volumes, getting notched up there. Bank of America Merrill Lynch has initiated a buy on that stock with a price target of 1244. So it's still much higher than where the current market price is. And Britannia, by the way, has hit a new high today. Britannia has crossed that 5,000 mark, up about 1.5%. Gautam, you spoke about the trading bounce in technology and oil and gas stocks, but everyone's talking about consumption these days. We've seen the way Jubilant Foodworks has surged, Britannia hitting new highs. Is that a space that technically looks attractive now?
Well, unfortunately, you cannot talk of it as a space or as a sector, but then you have to really take a very stock-specific call in that space. I think my medium-term view there is still quite positive, but near-term, because of these challenging times, I don't think many of these stocks are going to see greater highs. Yes, they will not make lower lows, but at the same time, I think the move on the upside is going to be far more hard work. So I would definitely have them in my portfolio from a medium-term perspective, but short-term, I think there is no reason to trade into them aggressively.
Okay, well, actually, the markets are not holding highs. Whether you're looking at Nifty or whether you're looking at the mid-caps. The mid-caps at one point in time, pull up the index for you. See, look at the Nifty has completely moved off from that 10,170 level, and now is below that 10,150 threshold, which our tech gurus were watching very closely. And likewise for the mid-caps, it's kind of given up half the strength. Let's pull up the CNX mid-cap as well for you. And there it is, at one point almost rushing towards a 1% high, 0.7 at least it did touch. And now we are seeing that come off. Advanced declines are still 4 in the green, for 1 in the red. No worries on that count, but the Nifty Bank is losing strength very, very quickly. And leading that charge, of course, is ICICI Bank, down now 4.5%, Axis 2% down. And then, of course, mostly the PSU banks, which are lower, but it's not looking very good at all. Sensex now is almost getting into flat terrain. It's just about 0.6. Gautam, your take on crude and therefore, the oil marketing companies, if you can speak about any sector at all?
Well, crude, I think, is pretty much in a very strong upward trajectory. I think we are looking at a target of about 74 on the NYMEX. And I think we could get there in a few weeks of time, and I think it's made a very strong base in that 58-60 zone. So there, I think we remain very positive. Whether that's going to be a major problem for equity markets or not is something that we'll have to wait and watch. But clearly, I think the trajectory is up. And on the other hand, the dollar index, which a lot of people talk about, the dollar index has seen a pretty sharp fall coming down to levels of 89.90. There we are seeing some indications of a possible bottom in that 87-88 area. So that's one dynamic that could, come into play in the next couple of weeks, and the equity markets will have to deal with that.
Okay, all right. Thanks a lot, Gautam, for joining us and giving us your views. So there is another 10% correction that he's expecting in this market, and it's going to be led by the global correction that is currently underway. But time to touch base with the management of a company that we rarely see or hear in the media. Torrent Power is the stock that we're talking about, and the company. If you pull up a 2-year chart of Torrent Power, you'll see that it has been a very strong wealth creator. Of course, this year has been a bit tough. For the last 5-6 months have been a bit tough, but if you look at 2 years, it's generated a lot of wealth for shareholders.
This is the 1-year chart.
This is the 1-year chart, yes, 12 months. Jinal Mehta, the MD of Torrent Power, joins us now to give us a sense of how business is panning out for them and their plans for FY19. Jinal, thanks so much for joining us. First, let's just start off with the basics, right? Because we haven't spoken to you in a very long time. Your quarterly performance has been quite volatile given the shortage of gas. Can you tell us what is the current situation as far as gas availability is concerned, and what can we expect in the quarters to come in terms of financial performance for the company?
Thank you. It's a pleasure to be on the show. During this financial year, we've been able to improve the PLF at our Sugen project from about 25% during last financial year to 65%. And going forward, we expect to continue the PLF upwards of 65%. We are sure that given the long-term strategic advantages of having gas-based power, we should be able to continue to maintain a strong PLF at our gas-based projects. We remain confident about the long-term strategic advantages of gas-based power. Only about 90% of the country's total generation comes from non-flexible sources of power, and only about 10% comes from flexible sources, of which around 5% comes from gas and 5% comes from hydro. We're sure that going forward, with the increased penetration of renewables, the country will need more flexible sources of generation, and gas will have its rightful place in the Indian energy basket. Okay. So we are sure that going forward, this volatility should get contained in our financial results, and our DGen and Uno Sugen projects should also start operating in the next financial year.
Okay, good morning, Jinal, and thank you very much for joining us. It's a rare appearance, and we thank you again for that. What is keeping the generation, I mean, PLF at 60 plus is better than the national average, I agree, but why is it only in the 60s? Is it a demand issue that people are not picking up the gas that they have signed up for, or is this a gas availability issue?
The issue surrounds more with the power demand in the country. We have been seeing tepid demand in the country's power sector, and there is just no offtake from off-takers. That's the key issue. The availability is pretty strong these days, and gas prices have significantly softened in the last financial year. So availability and pricing is no longer the issue. The key issue remains the demand in the sector.
Okay. What is the PPA status for Uno Sugen and DGen?
So for our Uno Sugen project, we are awaiting the regulator's approval for a 278 megawatt PPA that we have with our distribution entities. We expect this approval to come in the next few months. And once that approval is obtained, we would be able to commence generation at the Uno Sugen project. With reference to the DGen project, we are yet to, it may take some time to get long-term PPAs, but we are fairly confident that we should be able to operate the plant through short-term and medium-term PPAs.
Okay. Jinal, the one thing that the street has been very positive about is the lower AT&C losses in the Bhiwandi distribution circle, and the expectation is that the AT&C losses will come down further in the next 1 year because of the clarity from the government over the renewal of license. Can you tell me what exactly is the trajectory that we can expect over the next 6 to 12 months?
We've been able to bring the AT&C losses at Bhiwandi from 68% when we took over about 10 years ago to roughly around 18% now. within the next 2-3 years, we target to bring the AT&C losses to single digits. So we would be working very hard to achieve about 9 to 10% AT&C losses in Bhiwandi within the next 2 to 3 years.
So given your success in Bhiwandi, are you likely to bid for more such projects?
Certainly. We have a market-leading position in the distribution sector. We operate in 6 cities under 2 different business models. We operate as a distribution licensee in the cities of Ahmedabad, Surat, Gandhinagar and Dahej in Gujarat. And we operate as a distribution franchisee in the cities of Bhiwandi in Maharashtra and Agra in UP. We've been able to achieve industry-leading performance benchmarks in both the business models. So going forward, we will certainly continue to evaluate opportunities in the distribution space. Recently, the government of UP and Maharashtra have announced that they would be offering more cities under the distribution franchisee model. And we would certainly be very keen to evaluate these opportunities.
Okay, we'll come back to that, but just to close the discussion on the Bhiwandi losses, since the losses are going to go down further, what do you think the profits could be for Bhiwandi? Because as of FY17, I think you're sitting on about 100 crores of profit before tax for the Bhiwandi unit itself. What is the expectation going ahead? Could it increase by say 10%, 15%?
It would increase substantially. I wouldn't want to give a specific guidance on that, but the profits would increase very significantly.
Your debt is still high, 8,400 crores, right? Is there any plan, any timetable you can tell us in terms of how you may take it down?
That's right. So with reference to our debt equity ratio, we are very comfortably placed. Actually, our consolidated debt equity ratio is 1.05, which is amongst the lowest in the power sector and much lower than the norm in the power sector, which is 2.3. So I think we're very comfortably placed with reference to our debt metrics.
Okay.
Our debt EBITDA ratio is also about 2.8, which is again very comfortable.
Okay, in that case, I'm emboldened to ask my next question. Jinal, you know, you have a great record running plants at a higher PLF in gas where nobody succeeded, as well a great performance both in distribution and in your franchisee distribution. A zillion plants are going to come to the NCLT. Would you be a buyer?
As a long-term strategic player in the power sector and with presence across all the facets of the power value chain, which is thermal generation, renewable generation, distribution and transmission, we continue to scan opportunities both across greenfield and acquisition opportunities in the sector. We will continue to evaluate opportunities that come through the NCLT route as well. But any investment decision or capital allocation policy would be determined solely based on financial and strategic perspectives in mind.
Of course, but are you already talking to, say, PE guys? I mean, 6 months is not a long time. The Reserve Bank's clock has started ticking, and you know, by September 30th, many will come.
That's right.
So, are you already speaking to PE guys and whoever, strategic partners in India?
We are involved in some situations which have gone to the NCLT. Actually, they have not gone to the NCLT right now, but they are part of the, they are currently under SDR.
Yes.
And we've been involved in some situations. But as I said, any final decision on investment would be made keeping in mind the various opportunities available to us as an integrated power utility, because we have opportunities available in renewables, in distribution, in transmission, and in thermal generation. So we would prioritize where our capital goes according to long-term strategic perspectives.
In fact, I'm glad you mentioned renewables because that was my next question. That seems to be the new growth engine for a lot of companies, including yourselves. And your renewable portfolio was, I think, 50 megawatts in FY14. It went all the way to 400 megawatts in FY17, including solar capacity. Can you tell us over the next 2 to 3 years, what could the renewable portfolio look like overall? And a breakup, what could solar look like, wind, etc.?
Sure. So our current renewable generation capacity is 556 megawatts, of which 138 megawatts is solar and about 418 megawatts is wind. We have won bids aggregating about 625 megawatts during this financial year, of which apart from these, we have another 365 megawatts of wind projects under development at this time, taking our total aggregate under development capacity to around 1,000 megawatts. So going forward, I think within the next 2 years, by FY 2020, we would certainly target to scale up our renewables business to about 2,000 megawatts. Most of it would come from wind, and about 138 megawatts, which is the current solar capacity, is what we have from solar.
Okay. Considering the inorganic opportunities you're looking at, Jinal, say by end of 2018 calendar or end of FY19, what might be the total capacity that you may be sitting on, including JVs or whatever, however you take over distressed assets?
So our current operational capacity is around 3,700 megawatts, of which 2730 megawatts is gas-based, about 400 megawatts is coal-fired, and as I said, about 556 megawatts is renewables. I also mentioned that we have another 1,000 megawatts of wind capacity under development at this point in time, which would take our total capacity to around 4,700 megawatts within the next 12 to 18 months. Our immediate goal would be to take the operational capacity to about 5,000 megawatts at least by FY 2020.
Okay. You're not counting inorganic here then?
I'm not at this point in time.
Okay, so for the recent wind projects that you bagged in Maharashtra, what kind of IRRs are we looking at on an average?
That I would prefer not to answer that due to obvious competitive reasons, but certainly our capital will chase opportunities which are not which are at least in the mid-teens.
Okay. You know, while it's a great overall performance, yours is also an erratic performance. Do you see it stabilizing in the coming quarters?
See, part of the volatility in our results comes from the fact that we do not recognize regulatory assets in our distribution business.
Okay, okay.
We are one of the only companies who doesn't do that.
Okay.
And that is why there is volatility in the results.
Okay.
We have in excess of 1,000 crores pending with regulator for approval. We still haven't recognized it in our results.